Rob Van Rapports. Welcome to MBA Now. Mortgage activity has been solid during the start of 2019. In fact, the purchase index is near a 9-year high, while the refi index is just a tick shy of its highest rate since last spring. Here to discuss if this current trend will continue and to share MBA's outlook on what the market has in store is MBA's Chief Economist and Senior Vice President of Research and Industry Technology, Mike Fratantoni. Mike, thanks for being here.
Hey, Rob. Good to be here.
So, Mike, I know rates have kind of gone down. They're around 4.5 now, but do you see them going back up closer to 5%?
So, Rob, the global and U.S. economies are growing, but that pace of growth is slowing. And I think that's really putting a cap on just how high rates may go. But honestly, things are still pretty strong when you look at the economic data that's coming out. For example, the December jobs data was fantastically strong with more than 300,000 net gain in employment. At the same time, though, there's been a lot of financial market volatility, really showing that investors are uncertain about the path ahead. So we expect the Fed's going to be a bit more patient with respect to raising short-term rates. So we're only anticipating 2 hikes this year rather than 3, and probably later, and there's probably an increasing chance it may even be fewer than that. So we think we're going to be in a range for mortgage rates somewhere between 4.5 and 5, given all those factors.
Now, I know inventory has really been the talk of the market for the last few years, and it's been tight. But what is your outlook for new and existing homes going forward?
So we do expect a slight increase in new and existing home sales in 2019, probably about 3 to 4% above where we were in 2018. And you're exactly right. One of the biggest constraints on the market in 2018 was the lack of inventory. We are seeing inventory begin to creep up and beginning to see the pace of home price appreciation growth decelerate. It's not that prices are dropping, it's just that the pace of increase is slowing. So we're guardedly optimistic for 2019 in terms of home sales.
You know, speaking of demand, I know that's, or speaking of supply rather, I know that's one thing that has sort of kept millennials from being able to enter the market. Yeah, you couple that with student debt and it's sort of been the perfect storm, but now we're starting to see them in that peak home buying years of their lives. What's your outlook for millennials?
Well, you're right to focus there. There are 4.7 million 26-year-olds in the U.S. economy right now. So that just suggests just how much demand is coming down the pike. And peak first-time homebuyer age isn't until 31 or 32. We look at the home ownership rate for that cohort, the under 35s or even the 35 to 44. 2005, it was 10 percentage points higher than it was in 2015 or 2016. We're beginning to see that perk up a little bit, up 3-4 percentage points from that low point. So really, again, very positive for the next couple of years.
Yeah, we're really looking forward to see what happens with it. Thanks so much for stopping by and talking about your outlook, and please stop by again.
Thanks, Rob.